And we now move ahead to our next conversation. AI and ML in fraud detection, risk assessment, and predictive analytics. Another great conversation on the other side. Let's first start with calling upon our first panelist, Tupendra Bhattacharjee, who is the CEO and founder of Bargat.ai, focusing on digital transformation, retail banking, and data technology. He's somebody who's got a strong background in driving AI and data-driven initiatives in banking. He's also served as the Executive Vice President at RBL Bank and later was also the CBO at Probe 42, which was an information services platform. Thank you, Tupendra, for joining in, and of course, we'd love to hear your take now being a founder on the other side. So we'd also like to now call upon our next speaker, ladies and gentlemen, Nisarg Panchal, founder and CEO of DigiTathya, a technology company focused in combating counterfeit products through a breakthrough authentication platform. DigiTathya uses tamper-proof QR codes, AI-driven fraud detection, and seamless UPI integration to secure products across various industries. Now we'd like to call upon our next panelist, Prasad Lal, Executive Vice President at Axis Bank. Now, he has a significant experience at the bank and an educational background that includes IIM Calcutta. He's somebody who's got more than 16 plus years of experience, including his previous roles at McKinsey & Co. before joining Axis Bank. We'd also like to now call upon, as a panelist, next up, Ravindra Negi, who's the Group Chief Risk Officer at Bank of Baroda since May 2024. Do we have Mr. Negi out here? All right. Allow me an opportunity to move ahead to our next panelist. We'd like to call upon Abhinava Chanda, who's the Senior Vice President of Credit at Shapoorji Pallonji Finance Private Limited. He did speak yesterday as well at the day one of the conclave, and he's somebody who's held various roles in credit and finance, including Vice President Credit and Associate Vice President positions at the same company, and as well as prior experience at Yes Bank, ICICI Bank, Tata Motors, and Hindustan Coca-Cola. With that, it is now time for me to call upon the moderator of this conversation. Ladies and gentlemen, let's give it up for the founder of Venture Studios, Mr. Deepak Sharma. Venture Studios is an initiative focused on helping scale emerging stage founders with a purpose. He has a background as a president and chief digital officer at Kotak Mahindra Bank and is active in fintech startup ecosystems and mentoring. With Venture Studios, he supports early-stage startups with strategic guidance and growth scaling. Additionally, he is also co-founded India Accelerator and IA Labs, which nurture startups and drive innovation. With that, a big welcome to all our panelists. Thank you so much for joining in. And with that, we'd request Mr. Sharma to now tune in for the next conversation.
Great. So thank you for inviting us over, Narenji, and I think it's always a pleasure. Today we'll just try to bring in a slightly different perspective because I think I've got very interesting set of panelists here from industry who are practitioners to the founders, builders, and of course someone like Tupendra who has seen this from multiple dimensions, right? So I think we are going to talk about how AI and ML is moving the fraud prevention risk and the prediction model. What is getting shipped, what is stalled, how different perspectives from adoption to challenges, and how the whole fraud network is growing faster than our ability to connect and accelerate the adoption. In fact, only yesterday, I read the Deputy Governor's statement saying now we are seeing more fraud per transaction. So also a challenge for everybody in the room, be it the consumers who are using digital transactions, payments, or for banks, or for regulators and enterprises and those who are building solution. So I think it's becoming like a classic case, which I remembered and I read about in 1990s in New York. The crime rate just kept going high. They deployed more cops, and the crime rate went up further. And they just couldn't figure out. They always thought more cops should reduce the crime rate, but it kept increasing. I'm seeing something very similar happen even in our industry. We are building new solutions. Banks are investing more on deploying it, and still you find that the entrepreneurs who are sitting on the other side, they probably are highly motivated, or they are able to adapt to technology and solution a lot faster. And I think with this context, I thought we will spend next 30 minutes to get your perspective as to how you are seeing both the challenges and opportunities around the fraud network. So I think just a quick, maybe one question if I ask you, in 1 minute, if you can tell us, what is the measurable impact you have seen through AI, ML, and some of the newer solutions in last 1 year?
So if I had to kick off, see, when you're trying to measure fraud, you're trying to improve your detection and reduce your false positives, right? And over the last 1 year, I think one of the biggest things, realizations we've had is we have to move away from the era of transaction scores and just transaction rules to using ML and AI, and I'm specifically saying first ML and then AI in this context, to make sure that you get more robust customer level scores. And then AI in loop, human with loop, is where you use it in two places: for getting better transaction scores and getting better communication with the consumer, which is, I think, a big part of solving this puzzle. And with all of this, we've been able to marginally improve VDRs by significantly reducing false positives, but you know, the entrepreneurs are going to improve, so the challenge is every day.
Great. How would you assess the progress in last 1 year from your vantage point?
Yeah, so since everyone knows now that I come from a very different industry, we are working in anti-counterfeiting and product authentication. In the last 1 year, we've seen a great amount of awareness about this problem, and from fraud detection point of view, we are looking at companies being more and more open to adapting AI/ML models into their systems, because there is a certain amount of sophistication that these counterfeiters have reached, where companies can't identify, and they need robust models to tackle that problem.
So, since on the other side, I mean, till about a year back, I was on the banking side, and now on the other side, having visited banks from the other side, I find, rightly put, that there is some bit of transition happening from a good to have to a must have kind of a scenario, which is emerging across, where given the use of alternate data sources to track some bit of information additional to what you get in the regulated domain, to create profiles for customers, which is improving the quality of information that you have per customer basis, and therefore identifying proactively the bad actor proactively is something which is coming across.
Okay.
Like belonging to the BFSI domain, like the BFSI, the banks, the NBFCs, the entire ecosystem was the last one. They are the conservative ones to adopt this. But I think it's high time, even the regulator have understood. If you see at the current RBI hackathon, there has been a case study in which they have asked how the fraud detection can be minimized using systems. Now, using AI is actually a boon that we have already in-house tested millions and billions of transactions, the patterns. Manually, it's almost impossible through the legacy like systems and all. This AI, and not only the AI, but the underlying, the data sensitivities, integration of, the different systems, it helps for data authentication. And pattern recognition, which actually, you know, as somebody like in the earlier session they said, the hackers and the fraudsters are becoming smarter. But the regulators are actually catching up, the system is catching up, and hence the imperative of the development of the system, not only development of the system and policy, but also implementation and also the governance that we were speaking about is actually, you know, keeping pace. And as Ansar said, it's the risks are rising up. So should the regulations be, so should the policies be, and most importantly, implementation and governance framework, which actually is bringing down, like somehow, like if you see the current KYC policies, the usage of AI in hugely in this KYC policies, how they can be bettered, and in the other fraud detection policies, which actually have started giving results. I'll give you, like there was the matrices, as you know, they're figuring out the actual causes which would decrease it, like in our in-house only 40% of NPA level we have just, you know, have tried by figuring out the different weightages, working on the weightages and using the SHAP Lime technology. That is one of the AIs, like the Shapleys and the, you know, the local interpretability. We have actually trained the model and have brought down 40% NPA levels predetermined. So that's the power of AI, what I believe.
No, I think we all agree that I think the challenge that I see it completely from a zero base, the definition of fraud itself is changing. There are identity frauds. Earlier we used to link it with phishing, wishing, mule accounts. Now you find there are accounts that are available on hire or rent to move money. So typically they are not mule accounts, but you pay someone 1,000 rupee and say, let me use your account to move money, and those accounts are available. Different banks apply different cooling periods for transactions to happen, and thereby one very, very notable person whom I met in this told me that different banks' records are available on dark web, and they are priced differently. A large public sector bank's records are available for close to about $1, while a large private sector bank, I don't want to name any one of them here, is available at as high as about $10. And when I asked them the reason, he said that these two banks have very different cooling period between adding a beneficiary and moving the money. So fraudsters have figured out how quickly the velocity of money through which it can move out from a banking channel to a crypto and crypto to outside India can be really very, very fast. Also, what I picked in this conversation was there are a couple of countries where this is a large part of their forex revenue. So these are not frauds done by the old Jamtara gangs of the world that we used to talk, but this is an industry that is cross-continent. Or recently, you would have read only yesterday that when Indian government got about close to a few hundred people from Myanmar, they rescued. And all they were doing in Myanmar was running these call centers, running fake investment apps and getting you assured returns. So I think the question that I have now is the nature of fraud itself is multidimensional. These are like multi-vector. Or like what we used to call it, famous Hydra monster, right? You go and attack one and it will surface in another way. Because if a country's 40% forex reserves are coming through fraud, you can guess that country or you can Google it, then you can imagine the scale at which this is happening. Large institutional frauds, and these are not small frauds. So I think, Prasad, my question first is to you. Axis being a large bank, both on the retail side, you work with many large corporates, fintechs, you are also PSPs, or probably you support many of the large UPI and digital transaction. That's one of any fast moving of the money will continue to be the most lucrative thing for fraudsters to see that how do they play around And one of the challenges that we are seeing in this is because there's a high volume, we always push for low latency. We want transactions to move really fast. I do know, like now NPCI has come out saying if it's an Android phone and you register for UPI, you cannot immediately set up a transaction. There has to be a cooling period. So even NPCI is realizing that certain devices have higher propensity of fraud. So what are the design choices in terms of either features or graph signals, thresholds? What part of it you keep fully straight through? Where do you still bring human in the loop? Because the challenge of building a system always is about high false positive. You don't want to punish good customer in order to catch a wrong element. And I think we still see this is a typical challenge of CX, customer experience balance with fraud, right? So how are you thinking about it? What are the choices that you are making?
So I think exactly this is always the choice, right, between how do you get your detection better to creating least friction for the customers. So I think there are two parts to this, right? There is a part in which you can use technology and data and analytics, and all of that is progressing at a massive speed. But I think to that, two elements become important. There has to be clarity in what you are going to create through models, what you are going to let AI to quickly evolve. Because if you don't go down a well-stabilized model, then you'll not get anywhere, but the fraudsters are changing every day. So you need transaction rules to be sitting about this. I think UPI is a complication one step ahead in terms of everything that we are speaking about. Traditionally, credit card, debit cards, you had good models, good transaction patterns would work. UPI, the false positive problem is double because 60-70% of UPI claims are done by people who are doing mule, right? So you're sitting on a third-party problem and a first-party problem. Therefore, I think as far as UPI is concerned, banks have to get right not just the model on the customer and his transactions, but on the beneficiary. Creating beneficiary scores, creating whitelisted beneficiaries, creating bad beneficiaries become equally important. So I think there's a whole host of things in getting the model right, setting rules, that is where AI comes in. But there one has to be careful. You need human in the loop because if you let AI run rules, and we've done a bunch of these experiments, eventually some decision gets made and a false positive jump off the roof, right? Because he has made some choice, right? So you have to figure out how you get human in the loop. The investigators who are doing, we now have a monthly thing where investigators come, we do this closed file review thing, which has helped a lot. I think the last point on this is we will have false positives, we'll have to live with certain level of false positives, otherwise frauds won't go away. The trick in this is a false positive of 10 alerts to one real could be really bad if you don't have a good communication strategy, and can be okay from the consumer point of view if you have multi-channel communication, etc. And that is where I think of all the steps of this, AI has the biggest role. Using voice bots, using intelligent ways of getting to know how to reach out to the customer, to know when the customer you are calling, a lot of times now the phone is taken over, right? Can the bot figure out whether he's talking to somebody who's taken over the phone? Yeah. Because for a human that's difficult. And I think that is where the next curve of evolution has to be. We will have to work on everything, but I think that is where the biggest challenge is, and that is what will get us to somewhere closer to getting better to the challenge we have.
I would also say being a banker for very long and now still being on a board of a bank as a director, and I see things. I think the challenge has also been that there exists a department within the bank whose job is either you call risk containment unit, FRM. I think it's important for us to think of fraud, risk, and customer experience as integrated part of any product, technology, or solution. I don't know how, it's not easy, probably easy to say, but I think typically organization, the way they are designed and structured, that also creates an issue. So how best to solve, probably some thoughts you should pick it up and see how some of these conversations can lead to some action on the way banks structure their functions internally. Nisar, I think you are the youngest of the lot on, and I always love young founders, people who probably can challenge everything because you are not defending what's been built as legacy system or the way regulation processes have evolved over a period of time. So tell me, I think one of the challenges we always see, and this is even MIT recent report speaks about that 95% of all projects, especially around Gen AI, fails. AI still has a much higher, I would say, success rates. But one of the biggest challenges, everybody talks AI and Gen AI because it's fashionable. You know, if you do not talk, looks like you probably are left behind. But still, the success rates out of the projects are very, very low. And often what I keep seeing is the challenge is on the data plumbing. Because I think there are more people are trying to sell use cases, sell cool outcomes, be it on the multi-agentic, agentic frameworks. But very few people are saying, I'll first help you get your data right. Labeling of the data right. Because garbage in, garbage out, I think we all know that. So when you look at this, challenges around, say, data plumbing, and if banks ask you to help put together a minimal data, viable data foundation, compared to the way they are today, because banks still have multiple systems. Core banking is sitting somewhere else, your transaction, digital channel, UPI switch, payment systems. It's frankly a maze out there, right? So what does it look like in terms of schemas, feature pipelines, drift monitors, and how would you look at this solving this problem from perhaps completely fresh eyes?
Yeah. So, first of all, from a non-banking point of view, because we are primarily into product authentication, but while we are taking out our AI/ML models to different brands, number one problem is of data plumbing, because A, they don't know what data to give out, and B, they are very conservative in terms of what will happen if, you know, if there's a attack, if our data leaks out and everything. So we have to be incredibly detailed in the way we tell them, okay, so for our model, we have 9 layers, and each of those layer has a certain amount of weightage, and there are sub layers on top of it. So I have to give out very specific information, like we need this kind of product data, and we'll be mapping it against this kind of scan metadata of users across the markets and your supply chain as well. So the current framework that we are following is to A, communicate very properly, and B, is to create multiple layers. Once we have enough weightage on each layer, and once the brands also understand that, okay, this particular layer will give me this kind of results, and this is how I can prevent false positives, that's when they are open about opening up their databases.
But do you show them the urgency or need to make some of these changes fast enough in order to get the value? Because finally, banks obviously get motivated when they see what is the value at stake if they make changes in the way they work, right? So how do you handle some of these challenges?
So the number one challenge is that people are not, they don't have enough information. So number one stat that I give them is last year, the counterfeit rate in India, the losses that brands incurred from counterfeits were 1 lakh crore. So as soon as they, you know, understand the scale of the problem, something like this, they open up a bit. Specifically, I was actually talking to someone from the painting industry yesterday, and I gave them proper statistics that around 40 to 45% of all paint in India is fake. So when they understand the urgency of a problem like this, and when they understand the amount of revenue they are losing, that's when, you know, they open about it.
No, absolutely. So I think recently when PayPal CEO announced that close to 40% of the accounts that PayPal had were accounts which were of non-existent users. It's like similar to when X was acquired or Twitter was acquired, and Elon said that half the accounts on Twitter or X are bots, right? And the valuation of the company went down dramatically, even in case of PayPal. I think even today, I don't know the percentage, but even in banks, you will find a lot of these accounts You may call it mule account, you may call it, because finally if these are non-transacting, non-identifiable on an ongoing basis, there is a problem, because one of the very senior RBI officials I met some time back, he told me interestingly that all the banks, whenever there's a fraud that happens, you will say, look, the KYC is done properly. He said, it's KYD. You know your document, but you don't know your customer. And I think knowing a customer is something which is an ongoing activity. You don't do it only when you have onboarded that customer. And I think this is something, again, probably as someone who's thinking outside in, someone should build a product around it. I don't know who will build it, but probably if there are founders in this room, build it, because I think customers, their profession, their income, their location, their behavior is changing all the time. What we were 10 years back is not who we are today, right? So how are financial institutions continuously not asking me, but knowing still more and enough about me? And I think that is where we need to build next set of products. I think on that question, I think, Topendra, I'll come to you, because you have vantage point of being a banker, and now you are seeing a lot through what you are building at Burger. And I always believe that I think startups win by catching a novel pattern. You pick things which are not yet out there or visible to everybody. I think moment everybody can see it, you probably lose the value out of it. Because then it's about cheaper, faster, who can do it. Many people can go and solve the same problem. In fact, this is what I tell many of the portfolio companies who are part of venture studios now. But I think when you have to look at, and since you are building a product completely focused on building the graph networks and looking at the graph-based rules to identify the fraud patterns, how did you keep your alert fatigue low while surfacing on the new fraud typologies?
Thank you, and it's a good segue for me. So Deepak, picking from one comment you made earlier, like the entrepreneur on the other side is actually moving to the SaaS model. Okay, that's what you said, renting out an account or selling an account kind of scenario. So now, on this side, and having come to the supply side of things, the important thing is to understand how much is a bank ready to spend into this space. And I'm sorry, I'm digressing a little from what you asked, but giving the top 4 banks, leaving the 4 or 5 banks aside, there is a whole lot of financial institutions which are operating in the country. And I don't think beyond those 5, there is any major, penetration of high-end technology into this space. Okay? Apart from maybe some of the fintechs who are born out of probably the tech spaces of the country. Now, given that, my pointer was that, we have to move the needle from a good to have to a must have scenario across the board, not only for the top banks. I mean, they are banking maybe probably quite a bit of the country, but there is always the second account, third account, we've all dealt with that. So which is not being catered to at this point of time. Even the smaller loans which are going out is not being catered to at this point of time from a risk assessment perspective on the fraud side. Even credit being underwriting of such loans or insurance policies, etc., in the BFSI space, there is not much which is happening in terms of beyond the KYC scenario. So KYC is what you have and what you know. Now the problem is when you are doing digital, this diminishes. The master circular, master direction was built when you were seeing the customer face to face. Today, in a digital scenario, you're not seeing the customer face to face. He's somewhere there. Okay, so you need something more than just KYC. And rightly pointed out, KYD is what is happening. You know the documents. Do you know the customer? Not really. So therefore, the proposal is that we should have something called a KYC plus layer. This KYC plus layer adds more data into the customer's profile, which is not probably what he is giving, but what you are deriving from his interaction. And that data could be from his, his interaction during the form filling or during he being a customer and so on, but has to be recurring in nature. And that is where, things like various technologies like, ML for that matter, Prasad, I completely agree. ML is the first step. Then you have things like triangulation, where you use alternate data in a triangulated manner to actually create the profile rather than horizontally. The third thing that could build very well is the graph neural networks, where you are showing multi-dimensional rather than only linear or, maybe couple of layers. So this is where the world is moving to in terms of business. And these are supposed to be the guardrails which we have to build on. Yes, we are talking about AI today, but AI will work only when the basics are right and when the fundamentals have been built rightly. And that will create probably a safer bet here.
Awesome. Abhinav, I think we spoke about identity-related frauds. We spoke about transaction-related challenges. Let's talk about the credit. Okay, because that's again a big one. Of course, we are not talking insurance and many other industries here, but I think from credit perspective, since you look at that very, very closely, we obviously see that AI is transforming the whole credit evaluation to underwriting to even the operations efficiency. But still, I think the banking data that's available is both complex and it's regulated. You cannot get the data freely to train the models or improve the model accuracy because that's not available. So I think from your experience of building AI-driven compliances, early warning systems, credit platforms, how do you ensure that when you get into it, you look at a model accuracy? Because at the end of it, how accurate the model is, that responsibility still lies with the human.
Sure.
Algorithms, you are still responsible. You cannot blame it on the output that the AI generates. So, and I think balancing between automation, complexity, and accuracy, how do you go about it?
Yeah, so like rightly said, we cannot put the entire onus on the machines and then be, relaxed and then like perceive that the machine is doing the task as and when, because with this evolving, like the credit itself is evolving. Earlier, which used to be a completely, what do you say, ki fixed logic based or they were completely like system based, is completely changing with the huge amount of data that are being driven through the different systems. Currently, if you see any like organizations, be it like lending organizations like banks, they have huge like not only amount of data, but they have different systems. Like for example, they have LMS, they have LOS, they have the other different like CBS systems, so on and so forth. So the first thing that actually is being ensured is the data, and also more importantly, the source of the data. The regulator all the time emphasizes what first to begin with the source of the data and also the integrity of the source, and not only the integrity of the source, if the data is coming through the different sources, different channels, different systems, there should be some form of integration which says the data is authenticated right at the source, and also if there are multiple sources of data, which there should be a layer which would actually, it would get in the data and it would process the data right at the very beginning. So that the basic foundation of any AI, ML or whatever the model is the basic foundation is the data. And the data at the source, if it is, processed, if it is filtered, that's the first point, and that's done through proper integration of the different systems which would authenticate the data layer at the very source. That's number one. Secondly, rather than just let the whatever, like if you call the ML or even the AI or even for that matter Gen AI system work on its own, better to, like develop matrices, because there are in this now currently, we have so many matrices which actually gives us the causability, the cause and the effect analysis. what, like we have like currently so many like the different kind of like models which would actually tell us the weights, the causes which would actually cause something. And very, very importantly, auditability. We cannot sacrifice auditability for some other factors like speed or accuracy or any other thing. Auditability, system auditability, compliance auditability, regulatory auditability is the basic backbone of any AI or ML system. Like the auditability should run, the access auditability should run parallel with the development of the process, with the development of the credit. It should be auditable. The system, the process, the data, the output should be auditable every day, every moment on a real time basis. And that's how that's being done. Like there are various parameters which actually tells whenever the AI or ML model which actually, you know, it processes the data like through the credit. Like we have a credit which actually does, let's say, the basic filtering. The first level of being filtering is done by the AI ML model, where the weightages of, let's say, different parameters. Let's say if we are actually accessing a company, there are various factors. The weightages are given to the different factors, and that is again on a dynamic level.
Okay, great. I think mindful of the time, and I don't want to eat into the next session's time. One last question. Keep your answer only with one sentence. Okay, not a second sentence, because one assumption in fraud risk that everyone should stop making in 2026. Who wants to take the first shot? Anyone can speak.
So we have to move from fraud risk to intent to fraud, to figure it out earlier than the guy who is in front.
Okay, anyone else wants to take?
Fraud risk is not just about the transactions that are happening. It is now a combined thing across first party, third party, consumer, beneficiary. So getting the network is critical.
Good. What's the cheapest control that you have put that has saved you the most?
Human in the loop.
Good. Anybody else wants to take a shot? One thing you wish the regulators or vendors and IT would do tomorrow to double your impact?
Create one network so that what we are doing in each one of our institutions can be done at an entire country level with identifiers.
Solve the problem.
Good. So I think now we are just into last 90 seconds. A one-line advice to the teams deploying AI in fraud risk next quarter: where to start, what to stop, what to standardize. One line.
Maybe I'll go first. So you have to stop assuming that you are already ahead of the entrepreneur on the other side and that you are already ready. You have to start looking at partners in the vendor ecosystem, in the other bank ecosystem, across the board, because it's a joint problem. And I think you have to accelerate, therefore, what you are doing at looking at this problem across all directions.
Anyone else wants to take this shot?
So a double click on,
One sentence.
engaging and collaborating more with partners to actually solve the problem rather than doing it yourself.
Identify the problem, identify the resources, technology, manpower, time, vendors. See the requirement, the output level, and then go.
Nisarg, your last words.
Same. Just look for partners and stop trying to do everything by yourself.
Great. So here we are in time. All I would say is, if you want to protect your enterprises, start thinking like how the fraud networks do. If you have the same mindset, same agility, and constantly finding new ways to breach your own network, you probably will build the best defense. So thank you very much.
Thank you so much. And with that, as we have Dr. Narendra joining us, can I also request Preeti Rao Arora to please join us and help us in giving a token of appreciation, the Chief General Manager, Institute of Directors. We'd also request Anushka Singh, Corporate Strategy and Communications Manager Strategy from Shapoorji Pallonji Finance, also to please join us. Thank you, Anushka. Thank you so much, Preeti Rao Arora. And of course, Dr. Narendra in frame. Preeti, of course, represents IOD. And Preeti, thank you so much for being with us today. We'd also request Anushka to please step forward. Anushka gives it to her own colleague at Shapoorji Pallonji Finance, of course. As we celebrate leadership in the room at AI Conclave 2025, we can all encourage one another with that applause, everyone. And may I request all our speakers to please step forward ahead of the tables so that we can all come together in one frame. Ladies and gentlemen, day 2 of the AI Conclave 2025. Thank you so much to each and every one of you.